We were asking ourselves during the election cycle last year, why are all these articles buried? Why aren't we really getting the truth? And it turns out that the people who were responsible for telling the truth, somewhere along the chain, were cajoled or just told not to tell the truth, influenced by all of this back channel money that was going back and forth from the government to these folks.
David Sacks, the artificial intelligence and cryptocurrency czar for President Donald Trump, made the announcement last week during a press conference with the chairs of some of the Senate and House committees. Sacks stated that the administration is working on developing a clear regulatory framework for the cryptocurrency industry, which is anticipated to be in place by the year 2025. Sacks expressed optimism regarding this progress, citing strong support from key lawmakers who are aligned with the cryptocurrency industry for the first time in the history of the United States. Sacks believes that this new development will have significant positive effects on the industry in 2025 and beyond, despite the fact that it has not yet caused any immediate price gains because of this development. Sacks had a recent appearance on the All In podcast, where he discussed the bright future that lies ahead for cryptocurrency regulation in the United States.
Let me try to give you a little bit of historical context because I think that that's important. I think whenever I hear so many people breathlessly saying some version of WTF, as if this is totally new, it's not new. And I'll give you two examples, but one that I really want to double click on. The two examples I'll give you is that in 1941, the Truman Committee was formed because there was a fear that the spending by the Defense Department was completely out of whack. And over the next 6 or 7 years, and this is really what gave Truman the credibility to then become Roosevelt's vice president, was they found incredible levels of waste, fraud, and abuse during the war, before the war effort, and then after Pearl Harbor, during the war process. Over 7 years, that committee, and this is in 1941 dollars, they were tasked and budgeted with only $20,000 or $30,000. Okay, over the next 6 years, they spent less than $1 million. Inflation adjusted to 2023. This is where I found the data, was about $6.5 million they spent. You know how much they saved? It's estimated they saved somewhere between $10 to $15 billion in 1941. That's $250 billion 2023 dollars. The second example is we did this under President Clinton, and that was called the National Partnership for Reinventing Government. So the first thing that I think it's important to acknowledge is this is not new. We've done DOGE twice before. Both have been successful. The Harry Truman one was incredibly important because it really set guardrails for how this can be done. Everything in that committee, it was a Senate committee, was unanimous. So it was Republicans and Democrats that found waste, fraud, and abuse everywhere. They saved an enormous amount of money. The second, which is interesting, is these last two versions of DOGE were driven and led by Democrats, the same people today who are basically saying, hey, hold on a second, we have congressional committees or we have inspector generals. And they lack the awareness to know that their own party was the driving force for this 2 times before. And I think it's important to just acknowledge that those methods are not good anymore. Right? Because I think what we're finding early days is the rot is super pervasive. There's no accountability. And so I think you need people to look at it with fresh eyes. And what is DOGE at the end of the day? What they are read-only auditors of the truth. And the press secretary in the White House made this very clear. It's incredible the power that read-only access gives you. All it allows you to do is just take the data and present the data. They can't manipulate it. And what they're able to do is publish all of this stuff in real time. And that's why this is so important, because if it went into a congressional committee, to be honest with you, it would sit there and stew for 6, 7, 8, 9 months. You would maybe get small little tidbits of it, but now instead you're just getting the full thrust of it. And what is the biggest thing that I find concerning I think it's what Antonio said, which is that the media, who are supposed to be this intermediary layer that's totally objective between the government and the people, were not independent at all, but had all kinds of hidden incentives, $8 million to Politico, several $million to the BBC. I think it's important to ask what's going on. And by the way, that also has historical context. This is exactly what happened in the 60s and 70s, where it turned out that record companies were paying DJs to play songs. There was a huge set of lawsuits and trial cases, and the result was a change in the law, right? And we call that payola now, which is you cannot take this money without disclosing it. And so had this money been absorbed by these entities and actually disclosed, maybe we'd be okay. But Nick, I sent you a link. Maybe you can throw it on the screen for these guys. This is a very simple manifestation of this cycle. We talked about this, guys, and we didn't realize how connected it all was. But we were asking ourselves during the election cycle last year, why are all these articles buried? Why aren't we really getting the truth? And it turns out that the people who were responsible for telling the truth, somewhere along the chain, were cajoled or just told not to tell the truth, influenced by all of this back channel money that was going back and forth from the government to these folks.
The cryptocurrency industry in the United States is in desperate need of regulatory clarity for a number of different reasons. Due to the lack of clarity in the regulations, businesses such as Ripple, Coinbase, and Binance have been subjected to legal action and fines. Businesses and investors are left in a state of uncertainty as a result of the conflicting signals that the Securities and Exchange Commission, SEC, and the Commodity Futures Trading Commission, CFTC, have sent regarding the classification of crypto assets as either securities or commodities. Due to the absence of clear regulations, major corporations and financial institutions are hesitant to fully embrace cryptocurrency. They are concerned about the potential for legal risks, sudden enforcement actions, or shifting rules that could have an impact on their investments. The establishment of clear guidelines would encourage greater adoption by institutions and bring in additional capital. Without clear regulations in the United States, cryptocurrency businesses and innovation may move to jurisdictions that are more favorable to cryptocurrency. This would weaken the United States' leadership position in blockchain technology and reduce tax revenues and job creation within the country. It is possible that these avoidable losses, as well as fraud, scams, and misleading practices, could be prevented with the help of a clear regulatory framework. A great number of retail investors have suffered financial losses as a result of hacks, rug pulls, or failed exchanges such as FTX. Trust and safety could be improved by establishing appropriate regulations regarding disclosures, custody, and trading practices. These are just some of the challenges that the Trump administration intends to address in the coming months, which may result in a significant increase in the prices of cryptocurrencies.
I think I should stipulate that Google's models are probably the best of all the models across a broad base of capabilities if you test for them. And so let's start there, which is whatever they're doing is working. The thing that they need to do is be able to translate those models now into better products. And I think that that will happen slowly. Like, for example, if you look at deep research, most of the people online that are evaluating deep research would now say that OpenAI is both faster and just better on the margins. All of these things can be improved. I don't think that's a comment on the base model. I think it's a comment on post-training and how they're attempting to productize these things. So the other thing that Google has is a money machine that directly benefits from these AI-driven optimizations on ad targeting. The only other company that has anywhere close to the same credibility is Meta. So I think what both of these two companies need to do is do a better job of explaining how that $75 billion gets segregated. How much of that goes to these AI-enabled models that actually do better ads optimization? There's a really interesting discussion by a former Meta machine learning engineer on X about how they did it. It's pretty amazing. It's staggering. But if they could say half the money goes to that and the other half goes to more speculative, pre-training and post-training, I think the market would have eaten it up. So it's probably more of a disclosure issue for Google, because I would say right now their model quality is the best. The changing nature of jobs during the agrarian revolution. And what you saw was a large cohort of people who supported themselves through farming. And then the total quantum of those jobs shrank by 90% when you had industrialized farming and tractors and whatnot. But the economy, to Antonio's point, grew around that business and added other kinds of businesses that didn't make sense in that moment. And I think what you see is that when economies get more and more evolved, you see the growth of services, businesses that sort of are these things that can only happen when you have excess, right? The person that you pay for closet organizing would not have had a job in the turn of the agrarian revolution or the industrial revolution. Yeah. But they can exist in 2020 something, and frankly, they can make a good job. The life coach. There are all these jobs that just kind of come out of nowhere. I think that you're
cut that
waiting for this next turn of creativity. Like the big problem that we all have, maybe I'll take the more glass half empty version of what Antonio said, is we really haven't been unlocking people's creativity over the last 15 years. We've been trundling around, except safe of a few companies, which we all know, and we can just repeat them endlessly, but we know which ones they are, that are truly innovating and at the edge. Everybody else is kind of diddling around navel gazing. So the real problem is that we have not had a lot of reps in being creative. I'll give you just a very simple example. Nick, can you find this? Even extremely staid industries. Did you see the BYD clip of the car?
Yes.
And I thought
Parallel
to myself,
park, yes, with a little swipe. It's incredible.
How tragic is it that you look at this and you're blown away?
Yeah.
And you're blown away for two reasons. One is, A, I didn't think that that was possible. And B, why doesn't it exist in America? But the reality underneath the hood is extremely benign how this is implemented. And so I think that the problem is we spent so much time losing the script. I think Antonio's right. When you unshackle people to not focus on the mental load of getting the pronouns right or the this or the that, you won't be so overwhelmed by things like this because you will have already been pushing the boundaries of human creativity. We need to get back to that. We need to let these creative people cook. And I hope that happens. And I think that will happen.
President Trump's support for the cryptocurrency industry is legitimizing Bitcoin in the US. Kentucky, Arizona, Utah, Illinois, Texas, Ohio, Pennsylvania, Missouri, Montana, and Alabama are among 20 U.S. states that have introduced or are considering Bitcoin or cryptocurrency reserves as state assets as of February 10, 2025. Kentucky recently proposed a Bitcoin reserve law allocating 10% of excess state reserves to digital assets. Arizona's Senate Finance Committee approved the Strategic Reserve Bitcoin Act, allowing the state to invest 10% of public funds in Bitcoin. Texas introduced Senate Bill 778 to create a Bitcoin reserve in the General Revenue Fund to hold and acquire Bitcoin. The Pennsylvania Bitcoin Strategic Reserve Act lets the state invest 10% of its general fund and rainy day fund in Bitcoin. Florida is the latest to follow suit. Florida State Senator Joe Gruters introduced SB 50 to allow the state's chief financial officer to invest public funds in Bitcoin to hedge inflation. The bill proposes using Bitcoin and other digital assets to protect state funds from economic volatility. It describes how to hold Bitcoin in secure custody with a qualified custodian or an SEC-approved exchange-traded product. SB 50 also allows the CFO to lend Bitcoin holdings to generate returns without increasing state financial risk. The bill restricts Bitcoin allocation to 10% of account funds. Florida could also accept Bitcoin taxes and fees, convert them to dollars, and deposit them into the General Revenue Fund, if the bill passes. SB 50 also updates public and pension fund investment laws in Florida to reflect the new policy. Supporters of the bill say adding Bitcoin to Florida's investment portfolio would boost financial reserves and make them more resilient to economic uncertainty. If you enjoyed this update, like the video, subscribe to the channel, and turn on notifications for more on cryptocurrencies, digital assets, and the changing financial landscape. Thanks for watching.